about that. All right, it's 2:02. I can see the numbers are climbing. I'm going to kick us off, Glenn, with a
Sure.
welcome. So, welcome everybody. This is our payroll webinar covering Payday Super and terminations. I think mostly we're going to cover up, focus on the Payday Super, and we'll see how we go with terminations. But it's really a webinar that we want to provide our customers with, the path to payroll confidence with all the changes that's happening. But before I get into the agenda and everything else, I just want to do an acknowledgement of country. As we are meeting from various locations today, I would like to acknowledge the traditional custodians of the lands on which we are all meeting today. For me, it's the Gadigal people of the Eora Nation. We pay our respects to elders past and present as early innovators and acknowledge their significant contributions to science and technology throughout land, water, and culture. So what's up today? So I am joined by Glynn Flaherty. He's the Director of Payroll Matters. We have been working together for 5 years which
Mm.
feels a bit longer. I've done the welcome, doing some introductions. I'll go into housekeepings in a minute, but then Glenn is going to focus on the Payday Super and everything that you need to know and what is available for us to know at the moment. And then we're going to touch on terminations. Just going into some housekeeping, engagement and post-webinar comms. So obviously, I hope everyone can hear and see us. But ensure if you have some audio issues, just to make sure that the Zoom link inherits your computer settings. And if you have a question, please ask it through the Q&A box that you will see on the right-hand panel of the Zoom application. We will try our best to monitor and answer the questions during the course of the webinar. But we have a lot to cover, so we're going to focus on the content today. But we also have some polls, so we really encourage participation during the course of this webinar. We also will make sure that we review all the questions in the Q&A box. So please don't be discouraged that if we can't cover it today, please go and, put it in there if you have a question, because what we will do is we'll send off these questions to the various subject matter experts, which includes Glenn, and we will collate and distribute an FAQ during the course of next week. So we definitely want to, create an asset that is going to add value to all our customers and our audience today. Please be, fine. We are going to send you a recording after the webinar. We also will send the pack that will be shared today, as well as some additional guides that Glenn has put together for us as well as the case studies that he's going to touch on today. So lots of collateral that will be supporting you as we prepare for this Payday Super change that is hitting us. So, Mr. Glenn, I think the people would like to hear from you more than me dabbling. So really thank you. We're really excited to have you on board. So I'm going to stop sharing and let me know and we can quickly get you sorted.
Hopefully this is going to work.
It will work. So I've stopped sharing
And we good to go?
and I can see your screen. Thank you, Glenn.
Excellent.
Over to
Excellent.
you.
Thanks very much. I did some a chat via Zoom last week, and the NBN where I am in the whole area went out, which caused a few issues because I didn't actually realize my face was the only one moving. But good luck. We're going to do fine today, and I've got a backup computer system linked through the cellular of 5G or something if that's needed. As Lene said, today's about Payday Super and terminations. I finally finished my slides this morning because of some more things happening. And I think we're going to spend most of the time on Payday Super. So I hope that's all right. So what I've done is the presentation is on the slides will be about 80% Payday Super. I'm then going into the terminations. But one of the things which will be provided to you is a full reference guide on terminations. So please don't get upset if you came just for the terminations. But I think the Payday Super is certainly going to be the main area we're going to go through. All right. So just a little bit of background on myself. I'm a chartered accountant, chartered tax advisor, and registered tax agent. I've worked in this area for 30 plus years. So I live and breathe this area. Advise a lot of clients in both public sector, private sector, overseas. Quite often zip off overseas to do training of people where there's offshore payroll bureaus. So that gets really interesting trying to explain all of Australia's interesting laws. Anyhow, for today, we're going to go through Payday Super. So I've initially said about 50 minutes. I think it'll go over that. It's just going to depend on how many questions we get. Then we'll look at our terminations and we'll do a wrap up around 3:25, 3:30, because I know you've all got a fair bit on. So the resources, you'll be sent a copy of the presentation slides. As I mentioned, there'll be the termination guidebook. So that's a really good reference material. If you've got any questions, please ask. There will be some polls, a couple of case studies to have a think about. Nice and easy, because I want you to focus on what I'm saying rather than worrying or getting scared by the polls. And as Lene mentioned, any questions that I can't answer, or if you've got questions afterwards, if you can send them to ELMO. Any to do with Payday Super will come to me. Any which are product orientated will be dealt with by ELMO. And within the week, you should get a lovely compendium. I may not have the answers to every question. As I said, there's still some things going to come out. There's a few little, I suppose, issues in the new legislation. I'm still trying to get information on, but I'll certainly give you today as much as I can. And by the time I actually sit down and go through the Q&As, maybe I'll have some more legislation that's been passed by our federal parliament. All right, so we'll go through a background to the changes, why they're occurring, what the new payment rules are. Most people know it's a 7-day rule in most situations. The exceptions, how to minimise errors, and that's going to be really, really critical so you don't get hit with penalties. What we do if there are rejections by the super funds, and finally the process to set up now. I'm not going to go through penalties. My idea is we get it all right. The ATO or the Commission's already said, softly approach. If you're trying to do the right thing, they're going to spend their resources on those that aren't doing the right thing. So we'll stay away from penalties, try and get you the main subject matter bed down pretty well. As we mentioned, if I get time, I'll go through some terminations. We'll look at industrial relations requirements, redundancy rules, employment termination payments and that. But the termination guidebook is a fantastic resource for that. I think it's about 40 pages, so really good to actually have a look at later. Okay, Payday Super. Why, when, how, and what? So I try to use the journalistic phrase. I think I've left one out, but they're the ones I'm going to actually talk to today. The current rules. We've got under super guarantee law 28 days after the end of the quarter for employers to get their super into the super funds. The other issue with it is that what is currently reported through single touch payroll is just what the employer's super liability is. It doesn't say this is the super life paid. So this all makes it too hard on the ATO to actually match what they receive from the super funds as being received from employers compared to what the liability is of those employers. The most recent stats from the ATO estimated that in 2021-22, there was $5.2 billion of late or unpaid super. It's a big number, hence the reason we've got this Payday Super coming in. So that's a bit of a background. So the way they decided to fix it is they said, well, instead of reporting quarterly, paying up to 28 days after the end of the quarter, we're going to require super to be paid more frequently. Plus, the employers are going to be required from 1 July to report exactly what earnings they have paid the super on. So this is going to give a lot more transparency to the ATO, the timeliness of the payments by the employer, reporting what the qualifying earnings are. The ATO then looks at what the super funds report. They're going to know who to go after, all right? So we want to make sure we're all doing the right thing. So commencement, 1 July 2026. Now, just one point to make is if you have wages paid prior to 1 July and you pay the super after 30 June, it's not in Payday Super. So it only applies to the wages or earnings on or from 1 July this year. So do be aware of that. There is some terminology to know. When it first came out, I kind of got glazed eyes. I'm getting a bit tired of all the new acronyms I keep having to learn. But these are the 4 critical acronyms you need to know. First one is qualifying earnings, QE. This is what we pay our super on. For most people, this is going to be what we currently do anyhow, which is ordinary time earnings. I'll go through the additional things about it in. QE day is just the day on which you paid staff. There are a couple of modifications if you have any off-cycle payments, and I'll go through that. Then the two which are really, really important to reduce errors, there's a thing called a member verification request, a bit hard for me to say, MVR. And this will confirm, a fund will confirm number one, that the person is a member, the individual is a member, and they can accept contributions. So this is going to be something you're going to be rolling out in all your processes, and I'll go through that in a moment. If the payment's going to go to your default fund, and this is only for the default fund, there's a different one. It's called the MRR, the Member Registration Request. So the important one, though, is going to be this MVR. All right. So a couple of other things that are happening in the background. They're tidying up, or they've already tidied up the time it takes for contributions to get to funds. So all funds from 1 July this year must have adopted what's called the NPP, the New Payments Platform. For a non-IT type person or techo like me, an example would be I can pay a bill using OSCO through my online bank account. OSCO is part of that NPP platform. So money goes from my account through OSCO and it gets to wherever it's going essentially at the same time. So NPP. So it's going to be mandatory on funds, but it's not mandatory on employers. So if the employer is paying direct or using clearinghouses, have a check to see if they're going to be using this national payments platform, because it's going to mean just about instantaneous funds to whoever is the relevant funds itself. The error reduction methods. Now, I was watching an ATO webinar on all the techo side of it, and there's currently about 200 million contributions to funds by employers each year, and currently there are 1 million rejections. That's huge, isn't it? From 1 July, because we're going to have contributions made on a more frequent basis, the ATO expects that the 200 million contributions is going to increase to around 500 million contributions. Huge number. And there's going to be errors. So one of the things they've done in Payday Super is found a way or a method to reduce the amount of rejections by super. And most of them, what you'll be using is known as that MVR, the Member Verification Report. Or if the money's going to go to a default fund, you'll use the MRR. Now, these are mandatory reports that you need to request from 1 July this year. All right. So what will happen is before you make your first contribution for a new employee, they say, here's the fund I want. You'll lodge an MVR with that fund. The fund will go, yep, this person is a member and we can accept the contributions. And they have to respond within 24 hours. And I was looking at some of the technical stuff behind. If you send off a request on 4 p.m. on a Friday, they will have to respond by 4 p.m. on a Saturday. So it is a genuine 24-hour response time. You may get a lot quicker. So this is used the first time prior to you making the first contribution for an employee to a fund. So our new employees, anyone that changes a fund, something like that, will use the MVR. So who's going to provide the MVR? This should be either through your payroll software or your clearinghouse. Now, I'm looking at this from a tax agent side, so it's not my area, but what I recommend you do right now is actually check, will your payroll software or clearinghouse, will they be providing you with this service? Because it's mandatory from 1 July. So someone that you are using or utilising software or your clearinghouse will have to provide this service for you to be complying. And critically, it's going to reduce down your errors, hopefully. All right. So just a couple of scenarios. I already mentioned the first one. New employee, they choose a fund. You send the MVR to that fund. There's new employee, they don't choose a fund, and I'll come back to this a little bit later. If a person doesn't choose a fund, what we have to do these days, we have to go to the ATO and see if the person has a stapled fund. So a stapled fund, for those who haven't dealt with it before, just means it's a fund that has previously received super contributions for that individual. So the government's idea was too many people are ending up with multiple funds. So if they don't choose a fund, they still get the choice of fund that they want, but if they don't, the employer goes to the ATO. If the ATO says this is a stapled fund, before the employer makes that contribution, they still have to lodge an MVR with that stapled fund. If it's a new employee and they choose the default fund, or they just don't make a choice, and there is no stapled fund, then we will use the MRR. So the MRR will be to the default fund. And that's effectively registering the person. The fund will go, yep, that's fine. You've given us the details. Yes, we can accept contributions for that person. If you have a current employee and they change their fund for whatever reason, maybe they're with an industry fund and they set up a self-managed super fund, something like that, then we'll do an MVR to the new fund. So hopefully that all makes sense. All right. So it is only used prior to the actual first contribution. All right. So, and the fund, as I mentioned, must respond within 24 hours, even on the weekends. You do not keep sending it for any other reason. So it's only prior to the actual first contribution to a fund. So the error rate, so hopefully we won't have, we said, okay, there's a million errors for 200 million contributions, then technically you would say, well, there's probably going to be, was it 2.5 million errors with 500 million contributions. I think this is going to really help in reducing down that error rate, which is going to make it a lot easier on your payroll area or whoever it is that's going to be dealing with these errors if they do come through. Now, the thing that most of the you see in the publicity on is the new timing rules. There's a couple of little interesting things with this. So the first thing is ongoing employees, you pay the staff, you've got 7 business days after the day they're paid. So it doesn't include the day they're paid, after the day they paid to actually get the money into the fund. It doesn't have to be allocated by the fund within the 7 days, but they must have received it and are able to subsequently allocate it. I'll go through in a moment what happens if it's the person is no longer a member, though. If it's a new employee, the good news is we've got 20 business days to get it all sorted out. If you've got off-cycle payments to staff, so oh, look, we've missed a payment to some staff. We're fortnightly. We normally pay staff. They receive the money on a Thursday. We're doing an off-cycle payment. The good news is rather than having to do yet another Payday Super run, the super obligations on those amounts will just sit there and they'll be rolled into your obligation for the next normal pay. Now, there is one time where that won't occur. I'll just mention this to you. If we've got, and I do a lot of termination work, so you may have a person who is perhaps, I don't know, retrenched partway through a pay cycle and the employer pays them out. If any of that termination payment, might be their final accrued wages, is subject to super, the normal 7 business day rule applies. You can't just wait till the next normal pay run. So just be a little bit careful with it. The law doesn't actually say it, but when you actually read the law, that's what it means. It says the holding off to the next pay cycle only applies where the person is going to receive subsequent qualifying earnings from you. So be careful with your terminations. You can't just hold off the super on those people to the next normal pay run. Of course, we have fire, tempests, floods, lots of other things can happen. So the law allows the Commission to put out a determination when it is exceptional circumstances. Now, if they do grant that, then there's an extension and it's within 20 business days of the QE day or determination case specific. So it will actually be in the determination what's going on. So, floods we've had recently in Queensland, something like that. The Commissioner could put out a determination saying, well, if you are in the such and such regions, I am going to give you an extension to get your super sorted out until a certain date. So again, it's a good move. All right. So what happens if we do have rejected contributions? So we've done the MVR, everything's going fine, ongoing employee, and then suddenly we find that it gets rejected. Well, generally, this would happen because the person is no longer a member of the fund. So that's the bottom one there. So if that's the case, then we would issue the person, we'd go and ask them what's going on. And you've changed funds. Oh, I didn't realise I had to tell you. Well, what's the new fund? So you're probably going to give them a super choice form to fill in. All right. But the good news is you've got 20 business days of QE day to get that sorted. They come with the new details. Do the MVR to the new fund, it should be fine. If it's rejected because the employer sent incorrect information, look, it shouldn't happen because with this MVR, this will have all been sorted out to begin with. And the same if it was incorrect information provided by the employee. If we did have this happen, do be aware that if it was an employer issue, then you're still in that 7 business day rule. If it's an employee issue, perhaps I'm trying to think, they've chosen a new fund, didn't give you the right details. For some reason, the MVR came back fine. Then you've got your 20 business days. But as I mentioned, these MVRs should limit problems with the initial data sent to a fund when prior to the first contribution being made. So I think it's more likely to be where the employee is no longer a member of the fund. One I come across quite often is you'll get people retire and the payroll pays the last super to their super fund they've had forever and it comes back. And what's happened is the employee's retired, they've shut down what's called their accumulation fund and they've moved it all to a pension fund. Now, in that situation, the employer's still got the obligation. In that case, we'd be looking at the 20 business days of QE day. We can't give it to the individual, so we'd have to send a super choice form to the person. If they don't choose, then what will happen is you go to the ATO and they'll probably say, oh, the staple fund, yes, there's one there, but it's the one they've shut down. So you're probably going to end up using your default fund and doing an MRR, all right? But the good news is you've got 20 business days to sort that one out. So if you've got any situations you've had in the past, flick them on the Q&A, and if I can't get to them, I can certainly have a look at it after this session is completed. All right, so how do we minimise incorrect information? Pretty obvious, isn't it? Do the MVR, and that should hopefully minimise most of the rejections, all right? Just make sure that what you send in the MVR is what the employee actually gave you. So MVR or MRR for default funds has to now become part of your process whenever you have new staff starting or any employee who is going to change the fund that they want the contributions to. As I also mentioned, check now whether it will be through your payroll software or other software or your clearinghouse that will be providing this process. Now, the first little handy hint, we think, oh no, we're not going to make the 7 days for whatever reason. The law actually says the 7 business days excludes public holidays. And being a lover of reading legislation, like I am, I had a good read of it, and it says a public holiday is any day that is a public holiday statewide anywhere in Australia. So what this means is, I'll give you an example. This year, there's a little race in Melbourne. It's called the Melbourne Cup. You may have heard of it, and it's on Tuesday, 3rd of November. So let's assume you only pay in New South Wales, no staff in Melbourne. As it is a statewide public holiday in Victoria, you actually get an extra day, if you need it, to get your super contributions to the relevant funds. So if you find that you've got that situation, I don't think we're going to make the 7 days, quickly get a big national public holiday list and see if there is a public holiday somewhere in Australia that's statewide. I get my public holidays from the Fair Work Ombudsman's website. It shows all the holidays per state, and you may actually save your bacon on that one. All right. Now, we've talked about the 7 days, the 20 days rule. What actually happens when the funds get to when the contributions get to the funds? How long have they got to deal with it if they're going to reject it? Now, the laws actually state that the super funds only have 3 business days after they receive the contribution to confirm that, yes, it's a valid and they'll be able to allocate it. Doesn't mean they had to allocate it within the 3 days, but the person is a member of the fund and they can allocate it or return them to the employer. Now, one of the problems with the new legislation, and I was writing something about this morning, is in the new legislation, it says, oh, but if you're a self-managed fund, you've still got 28 days after the end of each month to actually do the allocation. And then it says, or additional time as is appropriate. So it got me scratching my head and thinking, hang on, if money has gone from the employer to this fund, and it's a normal fund, and they can't allocate it, you get it back within 3 business days. But a self-managed fund, we'd have a contribution on the 1st of August this year. The self-managed fund would have until at least 28th of, September this year to make a decision, and they could then send the money back. So it could be the self-managed fund sends the money back and the employer's already over the 20 business days. So what I'm expecting is there's got to be something coming out from the commissioner on what will happen in this case. It might be they say we will not penalise employers in this situation, but just be aware the 3 business day and it's in this what's called the super guarantee regulations only applies to the funds that aren't self-managed funds. All right, so we're hopefully going to hear about that a bit more about that soon. This whole area though, doing with super, as I mentioned, we've still got some legislation going through federal parliament. All right, stapled funds. You've probably all heard about the stapled funds, and I've already mentioned them anyhow. Someone's just asked a question: how do the MRR work with self-managed super funds? Well, it's probably going to be an MVR. You probably don't have your default fund as your self-managed super fund. With the MVRs, from memory, the legislation and that 24-hour response is also required of a self-managed super fund. That's a good question, and I'll check it post-session and confirm that. All right. Others, if someone else has said, so often you get super funds amalgamate and you get bounce backs. Absolutely true. So in that situation, we'd be looking at the 20 business day rule, going to the individuals, and hopefully getting the information we need. All right. So stapled super is one other thing that are going through Parliament. There's lots of stuff still going through Parliament. Currently, you issue a super choice form to a new employee, and you put in there, choose your fund. Here's our default fund. It is only if the employee doesn't choose a fund that the employer is obligated going to the ATO and seeing if the person has a stapled fund. The other part of it is the ATO will only talk to you once you've established with the ATO that that individual is your employee. So you've either lodged their TFN declaration with the ATO, which shows you're the employer, or you've already had a pay event. Now, most people won't have had a pay event with a new employee. So what is actually going to happen, and again, we've got some fine detail I'm waiting on, is that the employer is supposed to be able to now get the stapled fund information earlier, and will be able to give it to the individual at the same time as they give them the super choice form. So we don't actually know the actual process. I'm hoping what's going to happen is you've got a new employee, you'll be able to go online to the ATO and say, hey, we've got someone starting with us, sign a declaration, yes, they are going to be starting with us. The ATO will tell you about the stapled fund, and you'll be able to give that information to the individual. Because then they go, oh, that's right, because they probably don't remember they've got this other super fund. All right. Someone's just said Melbourne Cup is not a statewide, only Melbourne Metro. I thought that too. I had a look at the Fair Work Ombudsman's website, and that was saying it's a statewide holiday, but I'll stand to be corrected, and I'll actually check that one. Someone's asked if, oh, sorry, they're all going too quick. If the stapled fund is a non-compliant fund, unable to accept contributions, what would happen is you've been told by the ATO, here's a stapled fund, it can't accept the, so you send a member verification report, it's not compliant. In that situation, the employer should be able to pay to the default fund, all right? So that's what I would do. Now, in those situations, of course, we'll have the 20 business days to handle it. All right, so stapled super funds, hopefully next week we'll know from the new legislation, you'll be able to get the information earlier. Hopefully that'll be prior to actually onboarding the employee, give the individual a lot more information. Probably, I guess they're going to change the super choice form saying you've got choice, here's the default fund, by the way, here's your stapled fund. I'm not sure. So we'll actually have to wait and see what that actually says. All right. Someone said some previous session, out of pay cycle rules of pay, correct errors in prior pay runs. And it says, sorry, I'm going down my screen. Just bear with me. I can get up a little bit higher. Apply to correct errors where super has passed. If you're making a correction to a pay, so a back pay, and it's between pay cycles, then you should be able to hold off, because what we're looking at is when the person's physically paid. They are physically paid on a date. Is it the normal pay cycle? No, it's off their normal pay cycle and they're a continuing employee. So we should have 7 days from the next normal pay cycle for that person, I hope. All right. Can you find stapled fund information for a terminated employee? If you're making a contribution, that's a great question. If they're terminated, normally the ATO will only tell you whilst they're your employee. So it's probably going to depend on whether the ATO knows that they are no longer your employee or not. I will see what I can find on that, but it's a really good question. All right. So new process with stapled super, get the details from the ATO and provide them to the employee at the same time that they're given the super choice form. All right, qualifying earnings. I mentioned it's pretty much like ordinary time earnings. So I've got super guarantee law. Under super guarantee law, we pay super on a person's ordinary time earnings. Ordinary time earnings is what you earn for your ordinary hours of work. So it excludes things like overtime. And then we've got some super guarantee regs that will specifically exclude things such as, I'm trying to think, lump sum annual leave, long service leave on termination, redundancy pay, and things like that. Qualifying earnings is picking up ordinary time earnings, and then they've added two more things to it. One which I find is a bit weird. They've said if it's a commission relating to additional hours worked, so outside your ordinary hours, that will now be included in qualifying earnings. So your normal commission received for your ordinary hours of work has always been included, as are bonuses for ordinary hours are included. Interestingly, they've said in the law, commissions for work outside of ordinary hours are included, but they made no mention of bonuses. So presumably a bonus paid for work outside of ordinary hours remains excluded, nor anywhere in the legislation do they say, what's the difference between a bonus and commission? To me, a commission would be something which is a regular ongoing payment. Perhaps you sell cars and you get a commission on every car that's sold. To actually say, oh, this car I sold, I only dealt with that outside of ordinary hours, perhaps that happens in real life. But in most situations, commissions are going to be subject to a super because they don't relate specifically to work outside of ordinary hours. The other one they've included, and this is just really moving things around in legislation, is eligible contractor payments. And I'll go through that in a moment. There are situations where a contractor paid by an organisation, the organisation may have super obligations, and what happens under super guarantee law, they're effectively deemed to be an employee. What they've done in the legislation is they've moved those requirements from one set of the law and put it all into qualifying earnings. So I'll go through that. I seem to get a fair bit of work where organisations have suddenly found out they've got super obligations for contractors. So I'll go through when it can apply and how you can actually handle that and use your payroll system for that. So overall, though, really not much change in what is qualifying earnings. All right. Now, there is some disclosure rules. So someone's just told me more about Melbourne Cup. Thank you. Melbourne Cup is a statewide holiday. However, regions who have their own events can substitute it. So I'm going to go out on a limb and say, if the law says it's a statewide holiday, the fact that some other jurisdiction could substitute it, to me, should still be a statewide holiday for Payday Super. If you're getting down to the point, though, where you're trying to find a public holiday because you're going to be late with your Payday Super, I think you've got go and check that one out yourself. All right. Now, there is some changes in the disclosure rules, and to understand those, we need to look at what we pay super on. Our super obligations arise not just under super guarantee law. We can also have obligations under our industrial relations law. So things under our awards, employment contracts, EBAs, and even just employer policy. A really, really common one is employer-sponsored parental leave. I've got personal leave. It should say employer-sponsored parental leave. Sorry about that. Under super guarantee law, employer-sponsored parental leave is specifically excluded from being ordinary time earnings. But the majority of employers will pay super when a person's on employer-sponsored parental leave. Workers' compensation payments, if the person's doing no work, are excluded from super guarantee obligations. But the majority of awards state, if you go into the super clause, whilst the person is off on any workplace illness or injury and remains an employee, the employer must continue to provide super support for the first 52 weeks. It's a really, really common. If you go to something like the Clark's Private Sector Award, you'll see that example. So when we pay super, now Payday Super is only interested in the super guarantee or qualifying earnings, right? So qualifying earnings is the earnings under super guarantee law. It is not interested in any additional contributions that an employer may be legally required to make or actually does make, all right? And someone's asked what happens if you don't get a reply from the MVR in 24 hours. I don't know the answer. The new requirements say the fund has to respond within 24 hours. All right. So super guarantee obligations and industrial relations obligations. So currently, what we do in single touch payroll, we have two main labels that deal with employer super contributions. We also have reportable super that's not impacted by this. We have label L, which discloses the employer's actual super liability for an employee, and or so the employer has the option. They can only have to fill in one of these labels, or label O, which is the earnings base on which super is paid. Label O because ordinary time earnings. But the current law allows employers to include at label O, the earnings base, whatever they're paying super on. It doesn't just have to be ordinary time earnings. Similarly, label L can be what super are you going to pay, irrespective of whether it's just super guarantee law or industrial relations requirements on top. So this is changing. So the new requirements, number one, we're going to have to complete both labels. Label L remains, though, the same. It just shows employer super liability, and it can continue to show not just the super guarantee liability, but also your industrial relations as well. So no problem with that one. But label O is being replaced by label Q. And the important thing is label Q can only show what the employee's qualifying earnings are. This is a big deal. I know the biggest deal is getting the money into the fund, but for those in payroll, this is a big deal. You're going to have to go through when your payroll systems are upgraded and do a lot of work. And I'm going to run through that now. So label Q replaces label O, and label Q can only show qualifying earnings, which is those earnings which you have a super guarantee obligation on. No industrial relations obligations anymore. So what you're going to have to do, I had a client that had over 1,500 pay items, and we did a big review, and we went through every pay item and checked whether super was due or not, and then they were flagged accordingly. And when we did that, we do a two-part approach. First, we go through them all and we look at what's the super guarantee requirements, flag all of those. We then get copies of all their awards, industrial agreements, and employer policies. We go through and add all the additional flagging brought on by that. The employer then reported all of those things that were flagged at label O. Under the new Payday Super provisions, and the software only allowed you to flag yes or no. Now, under the new Payday Super provisions, number one, your software is going to have to allow you to indicate, although something's flagged for super, whether it is qualifying earnings or not. So that's an upgrade that's going to be required. Secondly, you've got to have someone who can actually go through and check the flagging of every code currently flagged for super and determine which ones are qualifying earnings and which ones aren't, and make sure, under the process required from your upgrade of software, how you actually do that. Now, if you're going externally, you've got to use a registered tax agent or BAS agent for that. So if you're doing it internally, hopefully you've got someone that's pretty good. Just be a little bit careful. That review is actually considered to be a tax agent service. And you do need someone who is qualified to be able to do super guarantee type reviews. But even if you get a tax agent who's great on super guarantee, they may not have any idea on industrial relations. So you need to be a bit careful. So step one, your software needs to be upgraded, and it needs to allow you to go through and flag what is Q, because the rest will still be flagged for super, but you need to make sure the Q ones are going to go down into qualifying earnings. Secondly, someone needs to go through and do all those reviews of all your pay items to make sure it is correct. The other thing about this is, and this is getting a little bit messier for today, is that if you have salary sacrifices in place, qualifying earnings will always include a salary sacrifice to super, but technically it excludes salary sacrifice to something like a novated lease. This will not impact on what you actually pay super on, but it can impact on what will be shown as the qualifying earnings. So I might just leave it there right now because I don't want to scare people too much. So the main thing is make sure you talk to your payroll software vendors. When am I going to be able to get in to do the label Q requirements, and how will it actually work? And what are your resources to actually get this sorted out? All right. Someone's asked, does QE include broken shift allowances and on-call allowances? I need to have a look at the broken shift allowance. Certainly with on-call allowances, there are on-call allowances paid and it's considered your ordinary hours, and there are on-call allowances which are paid for being available outside the individual's ordinary hours. So when I'm doing a review, it's not just the name of it. I need to look behind the industrial agreement or whatever it is and understand why the amount is actually paid. All right. Someone's just asked, for a corrective payment, we have 7 business days from the next pay cycle run or from the date the corrective pay is made. Okay, so if we've got a fortnightly pay to person and we're 1 week into the pay cycle and we give them a payment, then we should have 7 business days from the next cycle for that individual, so the end of the fortnight, to actually get the super into the relevant fund for that individual. All right. What else can I tell you? All right. Okay. So will your software be upgraded for the requirements? Now, perhaps this is some good news. I'm expecting the ATO are going to announce some transitional measures. So as far as disclosure is concerned, I'm hopeful what they're going to say is you've got enough on your plates already. The main thing we want is for people to get the super in within the 7 days. We're going to give you 12 months to get your label Q sorted out. Now, on the basis that comes in, what that will mean is you'll keep doing your label O, which can include anything. And then by the end of the year, flick it all over to label Q. Now, if we go from label O to label Q partway through the year, what you would do is zero out label O in your system and reallocate as required under label Q. So we haven't had any official announcement on that yet, but I am expecting there will be a transitional measure. All right, contractors. Sometimes we can have contractors that are subject to super. So your starting point is a contractor could only ever be subject to super if they are trading as an individual. So if you've got contractors who are companies, trusts, or partnerships, you shouldn't have a super obligation. If you engage a contractor and they're trading as a sole trader, individual, how do you know? Look at their ABN, go on to the ABN lookup, the abr.gov.au site. If you type their ABN in, you can see what the structure is, because a lot of times the contractors may not know. So if it's a sole trader and you want them to do the work and no one else, then you may actually have a super obligation. All right. The legislation will also include payments to persons, individuals, which is for their intellectual, artistical, musical, physical, or other personal skills and services in connection with these. So perhaps as an example, let's say ELMO said, Glynn, I'm employed by Payroll Matters Proprietary Limited. It's a company. If ELMO came to me and said, Glynn, we want you as the individual, contract with you as an individual, and we want you to present a session, contract with an individual, wholly or principally for my labour, potentially there could be a super obligation. Now, in real life, shouldn't be with me because I can have other people assist in the drafting the slides, doing research and things like that. So although ELMO perhaps wants me to do the presentation, they don't care if I've got others to assist me in the process. Similarly, if you ring a plumber up, your organisation brings a plumber to fix a drain, you may be dealing with, John or Jane the plumber, but you don't care if they've got an apprentice helping them. So we look at the difference between We want you to do the work, wholly principally for that person's labour, and what we call a given result, which is an implied right of delegation. But it can extend to these other areas as well. So just an example, if you did have a guest speaker and we want a footy player, well-known footy player, to give a speech, and we engage them as an individual, potentially you could have an obligation. Now, you may say, well, we don't have many guest speakers. Certainly in the advertising industry, this is an issue. You have people who do voiceovers. People may, stand next to a car looking nice because they're, a high-profile sports person. In those situations, you're wanting that person to do it. They can't send their Aunt Martha to come and do the work, or their dad as the voiceover who's been smoking a lot of cigarettes his whole life. So in those situations, if they're engaged as an individual, you do want that person to do the work. So beyond what we're going to go today, but if you do have current obligations for contractors, they are picked up in Payday Super. So same timing rule. So you're 7 days if it's an ongoing contractor relationship, 20 business days if your first time you pay them. There are a couple of ways in which you can handle this with Payday Super. Step one, when single touch payroll came in, part two, there was an option that most software should now have that allows you, purely for super purposes, to use the payroll system to actually process the super. The actual payment to the contractor still goes to the contractor, but you should be able to actually use your system to do so. So what I want you to do is, if you do currently have obligations for contractors, how do you currently pay the super? Are we going to continue perhaps just through accounts payable, or potentially we might go through payroll? So it's a special situation, an option that most payroll software should have. If you're not sure, ask your payroll software vendor whether it does have that ability. All right. So the payment to the actual contractor remains as normal. If you're paying super, let's say the invoice was $2,200, including GST, the super obligation is on the $2,000. When I've looked at this with clients, I had one just 2 weeks ago, they said, oh, can't we just give the money to the contractor? No, they're treated as an employee. So you need to make the contribution to the fund. The second question you get is, can we deduct it from what we're paying the contractor? It'll come down to what your contract says. Now, most contracts will say nothing. They'll say, we're going to pay you $2,200, including GST. In that situation, you're probably going to have to wear it. If your contract says the remuneration is inclusive of super or any superannuation obligations that may arise, then you should be able to take it out of the total amount. So just be a little bit careful with those areas. All right. Someone's asked if you're going to receive the slides for this webinar. Absolutely. So everything I'm going through right now, you will receive slides. Someone's asked, will this rule sole traders and contractors classified as deemed employees for super purpose currently pay super on invoices in a monthly batch? Does this mean from July we pay the invoice, will this be considered qualifying earnings, which triggers a 7-day countdown? Absolutely. You're spot on, the person that's asked that question. So we've got contractors, we're paying through accounts payable. We've got a few there where there's a super obligation. The payment you make, excluding the GST, is going to be qualifying earnings. You've got that 7-day countdown. So one of the things is, if you've got contractors, you don't want to be paying them all at different times. You want to do them all at the same time if there's a super obligation, so you don't have payday obligations on all these different dates. So good thing that's actually been asked. All right. Does Payday Super apply to a sole trader drawing fortnightly wages from their business account? Probably not. It's considered drawings, and drawings themselves, although they be accessible to the individual, it's not an employer-employee relationship, and it's not a contractor caught within the provisions of super guarantee rule. So the answer is no, it shouldn't be. Someone's asked, ATO have told them if we pay the same amount each pay for a vehicle allowance, super is payable. If the employee contract can't prove that it's used all for its expenses, should be paying super. Okay, if you're paying cents per kilometre and it's for work use of the car, deductible work use of the car, not superable. If you're paying a flat car allowance, the rule is that the employer must decide whether they expect that amount to be fully expended, this is from the Commissioner, fully expended in the derivation of a taxable income. So if you've got a sales rep that's getting 200 a week towards a car and they're on the road every day, I would say pretty obvious that it is fully expendable. If it's, as I've seen in contracts, we used to give everyone the management cars, we don't anymore, but we put in their contract, you get a $10,000 car allowance. It's got nothing to do with deductible work use of a car, so it would be subject to super. Whenever you're drafting contracts and there's issues with like flat car allowances in these situations, always think about having it drafted. I'm not a lawyer, but just from a super perspective, the vehicle, whatever the allowances you're going to give them, is inclusive of any required super. So it doesn't cost you another 12%, right? But you do need to look at why you're paying it and whether you think they're going to spend it all on earning their income or not. Okay. The other thing with contractors is you'll need to issue a super choice form if they don't actually give you their details. You also, if they don't give you their details, you need to go for the stapled super. Now, the stapled super request to the ATO, it is a different form that you actually complete, all right? And it's called a contractor stapled super fund request form. So for those that need to worry about contractors, go onto the ATO website and get that form, because you're going to be using that form instead of the normal way that you go to the ATO for stapled super fund requests for your employee. So a bit of a change in the processes in place. All right, so you can see why we might not get to terminations today. All right, so what else is happening? There's always been a fantastic ATO clearinghouse for super for small businesses. There's over 250,000 employers using it. It's being shut down from 30 June, or last contributions will be 30 June. What that will mean is all of those small businesses are going to move elsewhere, and I think most will probably move to their payroll software to assist in this process. All right. And someone's asked, is the board of directors considered as contractors to be included as QE payments? Look, it's a good question. The definition of employee does include people who are holders of office, and that will include directors. So yes, a director receiving a director's fee, it will be considered qualifying earnings, and therefore it is subject to the normal 7 days. Someone's asked, well, this is getting a good one, Australian company paying overseas employees or an overseas entity paying to an Australian contractor via an ABN. Gee, this is a good question. Okay, an Australian company paying people who are overseas to do work, generally the people who they are non-residents of Australia, non-tax residents of Australia, so you engage someone in the US that lives as a citizen of the US, there shouldn't be super obligations in Australia. An overseas company that engages an employee, which could include some contractors in Australia, could potentially have a super guarantee obligation in Australia and hence payday super obligations. For that type of area, go and get some specialist advice, all right? Someone's asked any super liability risk with a proprietary limited company where they only have one person doing the work and they're paid for their time. The business only wants them to deliver the work. If it is a, let's say, Payroll Matters, my company, I engage another company which has one person in it to do the work, providing my contract is with that company and not the individual, there should be no super obligation. The reason being is that that other company actually has the obligation. This is a clue, assuming it's not a some type of sham arrangement. All right. So that would be the way it worked. Someone's asked about the capping of super, which I'll go through in a minute. All right. What else is happening? Maximum required super per person. Perfect time for that question. Currently, the super guarantee law requires us to pay super 12%, but there is a maximum that's required to be contributed for an individual or employee and on a quarterly basis. And it currently works out to $7,500 per quarter. What is going to happen is the quarterly maximum is moving to an annual maximum. So initially you'd think 30,000. But I'm expecting, based on the indexation rates that have come out, the 30,000 cap currently on an annual basis will move to 32,500. So this gets really interesting if you've got high paid staff. So quite often what people with payroll do with high paid staff, they'll pay a certain amount as a super every month. They won't be able to do that anymore. What will actually happen is the individual is going to be getting 12% super until they hit the 32,500. And what will happen then, and they're generally on a total package including super. So we're doing 12% super as part of the package. As soon as we get to the 32,500, the individual will revert to a cash only salary for the rest of the income year. I hope that makes sense. So could be a bit more work on payroll, and you do need to look at that process right now. All right. So, and you get others who are below that would normally be below the caps, but then one week they get this huge bonus, and it may be that the bonus takes them over. The super on the bonus will take them over the 32,500. So your obligation under super guarantee law will cease once you get to 32,500. And again, this is based on the commission agreeing it will be 32,500. So watch out for those on total package plus super. Okay, penalties. I'm not going to spend any time on the penalties. They're pretty messy to understand. The ATO have come out and said, look, you're trying to do the right thing. Good. We are not going to throw resources at people doing the right thing. We will focus on those who are just not paying or continually are late paying the superannuation. Now, there are currently, I think it's around 995,000 employers in Australia. So for the ATO to go out and look at everyone be pretty tough. Hence, they understand these changes are going to be pretty tough on some organisations. To me, it's going to be the small businesses that are really going to find it hard. They just don't have the resources or the knowledge. Larger business be able to, I think, implement the processes and things pretty well. But small business, I mean, the accountants that they use are going to be run off their feet trying to get this all up and running. Plus, there are cash flow issues. If you're suddenly bringing forward the amount when super's paid, you've got a small business that was paying the super 28 days after the end of the quarter, and they're now paying effectively, perhaps weekly, if the staff are weekly paid, then it will have an impact on their cash flow obligations. What should we do now? First step, we've gone through MVR and MRR. Check your payroll software or clearinghouse will have this capability. I said, legislation says it's mandatory. Confirming your clearinghouse processing time. I haven't mentioned that, but if they're adopting that national payments platform, so national payments platform is mandatory on super funds, but not on those making the payment. Where an employer uses a clearinghouse, it's not when the money gets to the clearinghouse, it's when the clearinghouse gets the monies to the funds that it's deemed to be contributed. All right, so the clearinghouse is merely acting as your agent. So really critical you check what your clearinghouse is going to be doing and how they'll get the money. Your onboarding process for new staff or any staff with change of fund should include that MVR, MRR. When the new stapled rules are finalised, which should be next week, and we should see something come out from the ATO on how it's going to operate in practice, make sure you understand that, because we should be able to hopefully go to the ATO before someone starts, get the stapled super details and give that to them as well as a super choice form if it's not adjusted, so they can actually make a valid choice at that point. All right. Who's going to be responsible? So we're hoping the MVR, MMR will reduce rejections, but you'll have rejections happening because people have changed funds or something else. So who is it in your organisation is going to be responsible? They need to be aware of what is the maximum time frame. Is it still within the 7 days or the 20 business days or something else to actually rectify that? When you're doing this, and what I recommend you do right now is have a look at the rejections you're currently getting. Which of those should be fixed up with this new MVR, MRR? Which ones won't? What are they caused by? Is there anything we can do now to overcome those types of situations? Now, when you do have rejections post 1 July, it will also be good to classify them to see if there is any system changes that may be necessary. So you need to do a post-payday implementation to review where the errors occurred, what was caused, what can we perhaps do to fix it up. For those in payroll, hopefully you're going to get more resources, because a lot of you are now going to be paying, you might have had weekly, fortnightly, monthly pay runs. Perhaps you just paid all your super 7 days after the end of the month. Now, with each time you pay staff, you're going to have that 7-day rule applying. And of course, therefore, the increase in the amount of contributions made, as far as frequency is concerned, there is potentially increase in issues occurring. Do we have super contractor obligations? How are we going to handle them from 1 July? Think about, how do we get the super fund details from them? Stapled super information from the ATO and default fund. Will we run that through our payroll systems? Is it going to be through accounts payable? And what are we paying on? Does our contract actually allow us to effectively deduct the super from what we're paying them? Or will it be in addition? And as I mentioned, it's never on the GST component. It'll always be on whatever's the payment excluding the GST. All right. Disclosures. I've mentioned the new requirement with label Q. Although we're hopeful that there will be a transition and there'll be some time to actually get that sorted out, you really do need to know, when's your payroll system going to be upgraded? How do we go through and fix it? Review everything that's coded for flag for super, and which of those should actually be appearing at label Q. What else have we got? All right. So I've now given you as much as I can, hopefully, on Payday Super. So we've taken about just over an hour, which is pretty good. I'm just going to go through a few other questions. We have employees who work in Southeast Asia. We pay a fixed amount to the super month in Australia. How would this be treated if we don't have any qualifying earnings? It's a good question. If the people aren't subject to super guarantee law under in Australia, then they shouldn't be qualifying earnings, and so the Payday Super rules shouldn't apply. So it's the same thing if you've got an employer who pays 12% super, you're paying 12% super, and the employer says, we're going to pay 14%, or our EBA requires 14%, that additional 2% isn't subject to Payday Super rules. I know you're going to do it all at the same time, but you wouldn't be subject to the Payday Super rules. We have an Australian resident working in New Zealand. Wages are paid in New Zealand. Have we paid super under Australian legislation into our Australian default fund? Would we still have 7 days from days paid, or can we pay it with our Australian contributions? If the person remains subject to Australian super guarantee law, and it's going to depend on the facts, then the fact that they are paid in New Zealand won't matter. You will still have your 7-day rule in Australia from the date that they receive those qualifying earnings. But this is on the basis they are subject to super guarantee laws in Australia. If we pay the June 2026 super in July 2027, will it still count towards the annual super contribution cap of 32,500? As the law is currently drafted, there's two parts to this. So from an employer perspective, if that money is paid within the 7 days and you've met Payday Super requirements, then you're okay for the 32,500 cap. From the individual's perspective, though, the 32,500 cap looks at the actual income years in which that money is received and allocated by the fund. So there can be the timing difference. So I'll do an example. Let's say we paid our staff on 30th of June and we got the super in on the 5th of July. As we've done it within 7 business days, we're fine under Payday Super. And as it's within the 7 days, we're fine with super guarantee law. But from the individual's perspective, the super fund will say, we received it on the 5th of July. They will report it to the ATO not for 26-27, but for 27-28. So it would count towards the individual's maximum super in the new income year. So we have a contribution limit, it's the same contribution limit. Employers must put in 12% or up to 32,500 in relation to the year. It doesn't say it had to be paid in the year, in relation to the year, generally within 7 days. That same 32,500 is the maximum that an individual can receive into super, which gets concessionally taxed in the fund. For most, it's 15%. If you're on more than 250,000, it's 30%. But that looks at the monies received in the income year. So we can still have a few issues with that as we currently get. One thing I will mention, and this will come out from the ATO soon, the move to bringing super forward may mean that some people tracking towards the current 30 grand as an individual, they don't want to go above 30 grand received by the fund within the income year. There may be some issues in 26, 27 with this move to, within 7 days. So the commissioner is looking at putting something out, a bit of a transitional measure to say, hey, look, if you've gone over the 30,000 because of this move to payday super and a more timely payment, they're going to waive it, I think. So, but we haven't actually seen what's happening there. So just going back to the question, trying to put it simply, super guarantee obligations for most people has to be within 7 days of paid the wages, and that could, the actual payment of money getting to the fund could be in July, notwithstanding the wages are in June. But from an individual's perspective on not going above the cap, it looks the money's actually received by the fund, physically received by the fund in the income year. All right. Can you explain again about the higher income reached the 32,500? All right. So let's assume someone's on 400,000 a year, including super. So the employer initially 400 grand divides it by 1.12, works out what will be the cash component and what will be the super component. I hope I've got that right. No, I'll have to think about this one again. Let's say they receive $10,000 every week. So the employer will pay 12% on that. I say $1,200. And let's say that the total package includes super. So $10,000 every week, they're paid weekly. The employer puts in $1,200 within 7 days each week. Once the employer has put in $32,500, the employer has no further obligations under super guarantee law. It's just the contract. So if the employee's on a total package including super, the employer was initially taking out that $1,200 a week, putting it to super. But once the $32,500's been paid, then instead of the person getting a $10,000 salary and $1,200 into a super, they'll be getting a cash salary of $11,200. I hope that makes sense. What happens if the high income earner changes employer partway through if they've capped out? There have been changes. The employees, it used to be they could go to the ATO and get an exemption certificate, which goes to the employer saying don't pay super. But that could only apply where you had two employers at the same time contributing to super. The new provisions will be that if you're capped out or capped out at one employer and you change employers, you're CEO or CFO, you will, even though you don't have the same two employers, but you've changed employers in the income year, that individual, and it's up to them to do this, should be able to go to the ATO and get an exemption certificate. Once the organisation receives that exemption certificate, you'll stop paying super. So that whatever you paid as qualifying earnings up to that point will just sit there as qualifying earnings. All right. Does this mean that employers don't need to contribute towards super if they reach the 32,500? The 32,500 is on an income year basis. This is a super guarantee law obligation. All right. So super guarantee law says you've got to pay 12% on qualifying earnings, but qualifying earnings is capped on an annual basis. Once you've paid 32,500, you have no more obligations under super guarantee law. If you paid more super, that's a contractual matter or industrial relations matter. All right. So what I normally see, high paid staff on total package, including super, the employers will pay the super. I've got one which we call it a cascading approach. They'll pay the super out of the package until they hit the cap, and then they revert the person to a full cash salary. So this is something to have a think about. All right, just going to put the first poll up, please. I'll try to make them nice and easy. We've had a hard enough day already. So under Payday Super, once staff are paid, this is ongoing employees. Employee usually has how long to get the money to the fund. 7 calendar days to send the contribution, 7 business days to send them, 7 calendar days for the contributions to be received by the fund, or 7 business days for the contributions to be received by the applicable fund.
I'll come on to keep you company, Glynn.
Thank you.
Can you see the poll results?
I can.
Awesome.
And we've got lots of different answers, which is good. All right. So the answer in this situation, so we've got answers under each. The critical thing is it's 7 business days for the contributions to be received. Okay. So 7 business days to be received. Originally, they were looking at calendar days. And in the draft law, and this can be a problem if you ever use, was it Google AI and things like that, you may find something that says, oh, 7 business days. The legislation that went through was 7, so it says 7 calendar days. The legislation went through at 7 business days for the monies to be received by the fund, and it can be subsequently allocated by that fund for that individual. All right. Can we have the second one, please?
It's coming.
While we're doing that one, oh, here we go. If super's returned because the employee is no longer a fund member, so they've got another fund or the person's retired and they've shut the fund down, how many days does the employer have to rectify it? 3 business days from the original QE day, meaning day they were paid, 7 business days, or 20 business days? While we're looking at that, someone's asked, so any additional super beyond 12% could be paid quarterly as it's not part of Payday Super. Under super guarantee law, you can do what you like. Super guarantee law has no interest in it. It's going to come down to what your employment contract or EBA or award actually requires.
Just checking if you can see the results of the
I can
poll.
see the results.
Awesome.
Thank you.
Just checking.
All right. So if we could share the results. So most people picked it up. If it's returned because they're no longer a fund member, we have 20 business days from original QE day. So we go to the individual and go, what's going on? I've changed my fund, or I don't know. I'll check with my spouse or something like that. Issue a new super form, get the details. If they still don't make a decision, go to the ATO for a stapled fund. If the ATO is still showing the fund that's no longer accepting contributions, you'd end up using your default fund. All right. Someone's asked, just on the contractors, I always find contractors interesting. With subcontracted services, mainly gardening, sole traders, sign contracts, it could be done by anyone, by someone else if they're working with the team. Does that mean we need to pay super? Generally, no. And certainly with super issues and contractors, the first thing that gets asked by the commissioner is, let me see your contract. So you want to have good contracts. The contract says you're going to provide these services. You will ensure, any delegation, you have the appropriate people and skills necessary to perform the contract, things like that. So then we're looking more at it's a given result. So generally, and I'm going to say generally, there shouldn't be a super obligation. We had one where, though, the contractors actually had to have full security clearances. So it was pretty hard to then argue that anyone else could do the work in that particular situation. Someone's asked, what happens if an employer decides to pay super beyond the cap of 30,000 due to bonuses? Look, the employer certainly can. When we look at it, though, from the individual side, if they go above the 30,000, the ATO is going to contact them after income year end when they get all the information from the funds. And essentially, that excess super generally will get returned to the individual. It gets taxed to the individual. So the ATO go, oh, you're in the 47-cent tax bracket. The fund's paid 15% already. We'll take out another 32% and send you the rest. All right. So normally you find employees don't want to go over those concessional limit. All right. Um, Someone's asked us a good question. Will the March-June quarter super still be due on 28 July? The answer is yes. There's a bit of a pain with the changeover because the way Payday Super law is drafted. Just be aware that if you muck up on your March-June, normally if you make a mistake, what you do is you've gone beyond the 28 days of a quarter. You normally just pay the extra super to the fund, lodge a super guarantee shortfall statement with the ATO, pay some interest and some penalties. That can only be done up until for the 31 March quarter. For the 30 June quarter, you can no longer just pay the shortfall of super to the fund. It's all going to end up going to the ATO. So if you do ever have shortfalls with your 30 June quarter, go and get some advice because it's pretty messy the way it actually has to be handled. Someone's asked, we use Australian Retirement, which is ELMO default clearinghouse. Will it be upgraded for Payday Super, MVR, and MRR? So the MVR and things like that, I don't know whether the default fund will do that. My understanding was it's done by the payroll software or the clearinghouse. So I think the functionality is with the software or the clearinghouse, not with the super fund. But someone from ELMO would certainly answer that one. Has the ATO formally announced 32,500? No, they haven't. They base the indexation on Australian Bureau Statistics indexation factors. So those indexation factors have come out, and the information I've received is when you multiply the indexation factor change, it should be 32,500, but it has not yet been officially announced by the ATO, and who knows. So be aware I'm saying that purely as it is the expected limit for 26-27 at this stage. How many dates does it take the fund? How many days does it take for funds to receive? How many dates does it take for funds to receive the funds? I suppose that's how we put it, to receive the contributions. If this new payments platform is being used, it should be the same day. It's only, though, mandatory on the funds to be able to accept it that way. There is no obligation I'm aware of right now for the clearinghouses or through your software to actually adopt the new payments platform. I get the acronyms right, but the wording wrong. So check with your payroll software or your clearinghouse and see if they're adopting the MPP or not. All right. I think I've covered most of the questions I possibly can. I'm just going to go back up to a couple of earlier ones. What happens in the event of a fund changes, mergers that result in the fund shutdown periods? That's a good question. Is there a leeway on delaying payment? Is an MVR required in this instance when the fund is back online? Fantastic question. I have no idea. I'll be honest. So yeah, if they suddenly go, nothing can be received during this period, I have to see what's out on that one. I haven't seen anything written on it. There's certainly nothing in the new legislation on those situations. I would hope the commissioner may do a determination saying people are using this fund because the determination's in respect of a class of employers. So they could potentially do a determination. I would hope that's what the ATO would do in that situation, but I'll see what I can find out for you. All right. I don't know if it's going to be worthwhile, Lene, starting on terminations because we've only got 10 minutes to go. What do you think?
What about just maybe highlighting one big topic is what I'm thinking. Do you have something that
All
comes
right.
to mind, like one big topic that people need to know that maybe could impact?
Certainly. All right,
Yeah.
cool. Terminations. Look, probably you've got this takeaway. I'll just deal with terminations and the superannuation. I mentioned if you do your terminations off pay cycle and there's anything that the person's receiving which would make it qualifying earnings, you do have only your 7 business days to get that money into the account. So on termination, the most common, you'll have your final potentially accrued wages, lump sum annual leave, lump sum long service leave are not subject to super, says so in the super guarantee regs, nor is the redundancy pay. But if you ever have a payment in lieu of notice, that remains subject to super, and that applies whether it is taxable as an employment termination payment to the individual, and also whether it is forms part of the tax-free amount in a redundancy. So when we have a redundancy, quite common people receive redundancy pay, pay in lieu of notice, paid out annual leave long service. Although the pay in lieu of notice and the redundancy pay can both count towards the tax-free limit. It's the way the legislation is written. But even if that pay in lieu of notice ends up being tax-free, you'll still have a super obligation. Now, this is a really difficult area for payroll systems to handle. And most that I see can handle the fact that a taxable payment in lieu of notice is subject to super. But when it gets rolled up with the redundancy and ends up being all or part tax-free, payroll needs to do a manual calculation or manual override to put the superannuation in for that payment. So I hope that makes sense. So if we've got a redundancy off pay cycle and we pay the monies out and include a pay in lieu of notice, then we're only going to have 7 business days from the day we pay those staff to get our super into the relevant fund. So I hope that makes sense to people. All right, so the termination information I've given you, it goes through what your industrial relations obligations are, and it considers both with redundancy, it considers the redundancy pay entitlements. It also considers pay in lieu of notice when it applies, and what is included in the pay in lieu of notice. So pay in lieu of notice is a compensation for a person for what they would have received had they worked that period. One of the important things is that if you give a person 4 weeks pay in lieu of notice and they finished up, say, today on the 24th of March, although you may be paying out 4 weeks, under the Fair Work Act, the final date for your accrual of your annual leave and long service leave will still remain the date they terminate. So it doesn't notionally carry through that notice period. The employer could do so, or an EBA could provide it. But under the Fair Work Act, terminating today, 4 weeks in lieu of notice, compensate them on what they would have received had they worked the period. But for leave accruals, the accruals will cease on the day they actually terminate employment. All right, so I've gone through the full redundancy, pay in lieu of notice, and annual leave and long service leave. The section to deal with resignations, retirements, dismissals looks at your annual leave and long service leave. But what it then does is it goes through how we treat employment termination payments. So that could, again, cover payments in lieu of notice, accrued RDOs or toil paid on termination. Some EBAs are going to be payouts of accrued personal leave on termination. There could be gratuities and golden handshakes. Sorry we see you go, or we're really glad you're going type payments. So all of those things are ETP. So what the guide goes through, it says, okay, this is what is an ETP. The next step is to decide whether the ETP is to be classified as an excluded ETP or a non-excluded ETP. And what I've done is I've given you a nice summary guide of just about every payment I can think of based on termination ground, and it'll tell you whether it will be an excluded or non-excluded ETP. Excluded ETPs are coded type R in the payroll system. Non-excluded ETPs are coded type O, O for ordinary. Why is it so important knowing it's excluded or non-excluded? The taxing, there is a limit on the amount that people can receive as ETPs and receive some concessional tax. And that limit depends on whether it is an excluded or non-excluded ETP. The other thing the guide goes through is what we call preservation age. So purely for ETPs, and these days, if the person will be aged 60 or older at the end of the income year, usually the ETPs, whether excluded or non-excluded, the default tax rate of 32% actually reduces down to 17%. So whenever you're doing a termination, if there is any ETP, and assuming it's not all going to be tax-free under redundancy, check how old the person will be, not when they terminate, but the end of the income year in which they receive that payment. So if they terminate now, how old will they be at 30 June 2026? If they'll be 60 or older, then the 32% default rate should drop down to 17%. So it's known as preservation age. There are a whole lot of different dates, but these days it's just an age 60 rule. So something to be aware of. All right. So I think that'll do me today. For those that do finish today and go straight off to look at the termination guide, any questions on it, please send them through. And I'm more than happy to try and answer. And I've had a few questions that have come up on the screen. I'll have to go off and do some research in any event. So I hope we've covered off and given you what you've wanted today. As I mentioned, there's going to be a little bit more coming out through federal parliament, a bit more from the ATO. So a bit on that stapled super. We expect something about the transition with that current 30,000 cap going to 32,500, as far as what happens if the timing causes people to exceed the cap. So if they're the two main areas we're coming up with, and the ATO or the Commission are making an announcement on that new label Q, whether you will have 12 months to get it in place. But even if it's going to be 12 months, you do need to look at how you're going to be able to handle that in your systems and get it up and running as soon as possible. So how does the software allow you to flag it's for label Q, but still paying super on the others? And also perhaps the impact of any salary sacrifices on those areas. So on that basis, I'll let you go and pass you back to Lene.
Awesome. Thank you, Glenn. That was a lot of information to take in and a lot of, changes. And I always say the devil's in the detail. So thank you so much for going into that level of detail. And to all our customers, I hope this was a valuable session to attend. If you can see on the screen a little bit of a poll, just a feedback on the session, that would be great. Please just look out for the email that will come post-session. It will take a few days, so give it 48 hours for this email to turn around. We have a lot going on, so it will contain the recording of the session, the handouts, the pack, and the case studies that was, discussed today. But yeah, it will be great to just give us feedback. I feel, Glenn, there has to be like a Paydays 2.0, 3.0 in the next few months, as it is going to take, it's still going to change. So really thank you for all the valuable information. I have been talking to our product leaders. All our ELMO customers can look out for some more guidance and information on the upgrades, as well as changes in how we're going to support the Payday Super from an ELMO product perspective. So please look out for some comms that will come in due course. So thank you very much. And thank you, Elise Brown, one of my peers that worked on the back end. Thank you for the polls. Really appreciate your help in making this session very successful. Glenn, thank you very much. And to our customers and audience, really thank you for your time. We know 90 minutes is quite a big chunk out of your day, so really appreciate it. And that's it. I think we'll wrap it up. Thank you, Glenn. Thank you, Lily.
Thank you.
Have a good day.